Hello, good day everyone. Thank you for coming into this YouTube channel, Trade Live with Precise Trader. Today is 4th June 2025, and do take note of the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicative of future returns. The content on this webinar is mainly educational purpose and user information entirely at your own risk, and you must assess the risk of your trade with your broker before you put in your trades. With that, we move on to our live analysis. Okay, the key data that is going to be out tonight. Okay, in fact, we have Australian GDP, which was out this morning. Forecast was zero point 0.4, but came out to be zero point 0.2, which means that the data was weaker than expected. Then we have a 2015 ADP non-farm employment change. The forecast is 111K, and we also have a BOC rate announcement. Okay, I think market is expecting unchanged. Previous was two and three quarter percent, and market is expecting unchanged. Then 2200 hours, we should be having this ISM services PMI followed by the BOC press conference. Okay, so these are the key data that is going to be out tonight. Okay, so as far as this trade is concerned, we don't have any trades, and we're having some technical issues on the system because the the programming, the formula has changed, so we are not we're trying to resolve it. So until then, I think we have to look into the chart and do it. Yeah. Okay. Thank you. So now let's move on to our trades. What I'm going to do is I'm just going to talk about few currencies, like for instance, since Canada is rate announcement, probably we look into Canada. Then maybe the three currencies: euro, pound, and dollar yen. Okay, then of course gold. What is it we are looking for, and how we can trade that? Okay, let's go into first look into gold first. Okay, let me share that screen. Give me a minute. Let me change the screen and. Okay, here. I don't know what screen is this. Okay, I think I'll change the screen. Okay. Okay. So the if you look into gold, we remember last week. I think last week I was discussing. I think the last time when we were discussing, I was saying we are looking at the target somewhere. Just give me a minute. Give me a minute. Yeah, sorry. So I was saying we are looking at the target somewhere near 3402. Okay, if you have been following us, I was saying that the market should hit around that level, then market should start to turn down. And I think yesterday it hit a high of 3392. So which means to say that a probable high has been confirmed. Okay, I'll give you a projection. I think it was 3406 and 3425. Okay, these are the two levels. Okay, hold on, I'll give you a precise level. Yeah, so about 3396 and 3414. So that should be the high, and we should see the price turning down after this level. So now this is based on the weekly. So if you look into the daily, okay, there is a probable, that means the high which you have seen yesterday, okay, that might be the high for the week. So now if this is the scenario, then how should we trading this currency is, okay, we should be holding a sell, okay, having that 3392 as the high for the week. Then we should see the price moving lower, and in fact today we should see the price testing that 3333 or lower. So either today is going to be in a range or congestion, okay, range or congestion within this level. That means between 33 33 and I don't see the price going above 3384. Okay, 338084. So we should be holding a sell. Okay, so that means we should be holding either a cautious sell or sell and hold, okay, near this level. So how are we going to trade now is, if we see, okay, because we need to see whether the the lower time frame, okay, the lower time frame are still in our favor. Okay, this is still in our favor. So what we should be doing is, okay, I'll give you two types of entry levels. Okay, two type. One is sell and hold, another one is cautious sell. Okay, when we go for sell and hold, we should be selling and expecting the low to break, or we have to have our focus seeing that whether the low is breaking. Then cautious sell, okay, cautious sell meaning we can trade within the range. So now how can we go for this trade? Okay, we should have sold at 72. That is the high we are betting. So right now we expect this trend to continue for another three more minutes. Then as far as this time belt is concerned, okay, this time belt, the current time belt which we are looking for is concerned, then we expect this thing to be in this range. That means 46 and 72. Okay, then of course if the 72 breaks, then we can go for 80, 82, and we don't see the price going beyond that level because we feel that the high for the week is already been seen. So I'm giving you all these possibilities. That means for gold, we should have seen the high. That's the first thing. High for the week has already been seen. If we are right, then we should see this low 33 breaks. Okay, if this 33 breaks. Uh, Alternatively, if this high breaks, then we are wrong. Then we expect the price to go higher towards 33414 and 3430 and eventually come back, because today is the beginning. I mean, not say today, this week is the beginning of the month. So whatever we expect, this trend should be working for this next few weeks or for the whole month. Okay, so this is the thing we need to take note. So now, how can we trade? Okay, what I want you to do is, okay, we are going to go, and always remember, we trade on pyramiding style. Okay, we go for a pyramiding style entry only when the market is in a range or congestion, or the market is breaking the previous high or previous low. Okay, what do I mean by that? That means, so if we are going for a sell on staggered basis, that means we bet that this high is seen. But of course, if it goes beyond this, then chances are this high and this high, then chances are we may be sitting in the wrong side of the market. So now, how can we trade? Okay, just now I told you that this is going to be the high. If this is the high for the week, then we should see a lower high, which is market is showing lower high, and we should see lower low. That means, this low breaks. So what we can do is we can try to go for a 0.1. Okay, we'll go on 3 tiers entry on this. So 0.1 to sell at 336. Hold on, I see where this. Okay, this is a 60 minute. 60 minute, we still have 44 minutes, 45 minutes left. So which means to say this strength can continue. Okay, so we would sell 0.1 at 62, then 0.3 at 66, and 0.5 at 70. Okay, but again, if this 72 breaks, then we got to be a bit careful. Okay, so how we are going to do, we'll just take, and whichever we see profit, we lock in our profits, and that's how we should be trading this. I'm sorry, just give me a minute. Okay, so I'll give you a message. We'll sell 0.1. Okay, when for those of you who are coming first time, okay, this is how we play the game. We'll go for a cautious sell, especially when near the market. We always try not to go with the maximum lot size, and we have a first entry second entry, best entry, and third entry. Usually these are the entries we call it. So we go for cautious sell, cautious sell. XAU. So we are going to go on three tiers, 0.1, 0.3, and 0.5. Okay, at uh, 3362, 3366, 3370. Okay, so this is going to be our entry, because the reason why we are going for this kind of entry is because you see that 60-minute has just started. Okay, the 60-minute has just started, and the price, we still have another 45 minutes of the strength remaining, but of course it can fail here. So we will try to go in this method. Okay, so three tier entry, and I have to give you the stop and TP. Give me a minute, huh? Okay, so the first one, the stop. Okay, our current day high is 3372.6. So we'll put a stop at 73 half, 75 half. Okay, we have a stop only on two tiers. Okay, so that means stop the 0.1, 3373.5, 3375.5, and TP at the first one, we can go for 33550. Then if that low breaks, we can go for 3335. So which means to say our stop loss, the entry is going to be in three tiers: 0.1, 0.3, 0.5. Stop loss in two tiers, which is 33, 73 half, and 75 half, and 33, 75 half. These are the two tiers stop. That means for the second and third, we'll put as a two tier stop. Then our TP is two tiers. Okay, meaning first one we'll try to exit at 3350. The second and third, if it's still, we exit at 3335. Okay, so any question, you let me know, then I will explain. So overall, I'm giving you the view, and I'm also telling you what is to be expected. Okay, what is to be expected for today. So today, what we are expecting is most likely most likely this either the high, this 72 half should hold, or we may see one push towards 82 or 84, then market may come down fast. So in the event, if let's say we get stopped out on this trade, then we got to go for a buffer entry. Okay, that one also I think I'll give it to you. Then better, you can key in that order. So at least in the event if we get stopped out, then we are still in the trade and we'll try to get safely with the profit without losing. Okay, I just show you again. Okay, we feel that market has seen the high for the, okay, hold on. Just give me a minute. Yeah. So what okay. So there is a likely chance that that might be the high. Okay. So if that 92 is the high, then today's high should not go beyond 80 or 84. Today's high. So always remember, when we are going for a sell, we should be concentrating on the high. When we are going for a buy, we should be concentrating on the low. So overall, we should see the price testing this low. If we are right, then of course this should be coming off towards this low for this week. And also take note that this week I think we have a non-farm so non-farm payroll, yeah, non-farm payroll, because it's the first beginning of the month. So this Friday we should be seeing the non-farm payroll. So that should give us an indication of how the market is heading, and how is the U.S. economy, is performing in terms of labor and so on and so forth. So here, so let's do this trade, and I am. Let me see. I've already keyed in earlier, but I don't know whether my order was filled. Okay, I think okay. So we let's work on this trade and see how's the outcome. Okay. So the next trade we are going to discuss is euro dollar. Okay, euro dollar. Okay, looking at the euro dollar, this is also in a similar phase as the gold. Okay, so meaning to say that this should be extension, and we should not see the price going above 115 or even 11465. So this should be the two levels which we are expecting. So when we look into the daily, so this also giving us a similar picture. That means that yesterday's high might be the high for the week. So today we are seeing some pullback, and we should see the price turning off soon. Okay, so this one, what we feel is we should see our 360 in a congestion. So that means this strength is expected for another another 1.5 hours. Then after that, we should see the price turning down either before 11420 or 11450. So looking at it, okay, this is also in a similar phase. Okay, so what we should be doing is we should be looking to sell euro at 114 10 or 11420 with a stop above 55. So if you sell at 20, then it's about 30-35 pips risk. And the TP, we should be seeing the price breaking this low. If it breaks, then we should see the price heading towards 11260 and 11220. So this is for the week. Okay, so we can go for a sell. Okay, this is also, we'll go on a two-tier entry. Okay, sell. This is can be either a cautious sell, or sell and hold. Okay, both way is possible. So when we go for sell and hold, we should expect your previous 120 360 low to break. So if you're going for a cautious sell, then exit before the 360 or 120 low. So we'll go for cautious sell euro at this is, we'll go on 0.5 and 0.5 and 0.8 or 0.1. This will go on two tiers. Sell at 11420 and 11450. Okay, stop at 11455, 11475. Okay, and TP at 11360 and 11360, 11260 and 220. Okay, so I hope you get this message right and message clear. Okay, so that means we are trying to sell euro 0.5. Okay, 0.5 or 0, you can put it as 0.2 or 0.3, whichever way, but it has to be in two-tier entry. So we will sell at 11420. Okay, 11420. Then another one at 11450. So for 11420, we'll put a stop at either 11455 or 11460. Okay, either 55 or 60. Then the 11450, we'll put a stop at 11475 or 80. Okay, then the TP, we will go for 360, 260, and 220. So again, for those people who have come in late, okay, what we feel for euro is we may have seen the high for the week yesterday. That means that yesterday's high should be the 55 should be the high for the week, and we should see the price consolidating and eventually breaking the low. Okay, so this is for the euro. The next one we are going to look for is pound. Okay, pound. Okay, by the way, I think the gold that 62 is filled. I think 62 is filled. Okay, we are still expecting some more strength for another half an hour. So, but we have to be in the trade. Okay, so we want to be in the trade. So we are going for this trade. Okay, so now let's do the pound. Okay, so the pound, if we look on the weekly, okay, 135.90, which is the previous week high. Okay, most likely, uh, okay, that might be the high. Okay, that might be the high, and today this is a congestion which we are expecting. So most likely today's high should not go above that high, or in the event if that high breaks, then we may see an extension towards 3660 or 37 before the price turns down. Okay, let's see the lower time frame and see whether uh, this is going to be okay. So now looking at the chart, okay, looks like this might be the high. So if this is the high, market should go up, then eventually come down, and you should be testing this low. So our targets, we'll take it as of now, 34.90 and 34.50 and 34.20. So these are the three targets level: 34.90, 34.50, 34.20. And as far as our entry is concerned, we'll try to enter at 60 and 85 with a stop above 3605. So we have two stop levels and three exit, three tier exit. So entry also will go on two-tier entry. So here we are going to sell, cautious sell, pound at 135.60. Sorry, I will put it as we'll go on two phase entry. So either is 0.5, 0.8 or 0.3, 0.5. Okay, whichever way you want to put, whichever you are comfortable with. So we'll sell at 135.60, 135.85, and stop at 136.05, 136.15, and TP at 134.95, 134.55, 134.25. So these are the three exit levels you can look for. So always remember, when we go for a trade, we are going on staggered basis, and also when we put our stop loss TP, also we'll try to put it in at different levels. The reason being is because in the event one gets stopped out, so the other one is there to give us a buffer in our trade analysis. So now we have 3 trades, 1 taken, 2 still working. Then later we will do dollar yen again, but before that we will discuss gold one more time in detail for those people who have come. Okay, always remember when we are going for a trade, or when we are trading, or when we are a trader, okay, we need to have a plan. Okay, before we take a trade, okay, we need to have a plan. Okay, our plan should be in such a way that, okay, in the event, that means first of all you need to ask yourself what kind of trader you call yourself, whether are you an aggressive or a conservative trader. If you're aggressive, you are more risk taker and you don't want to miss opportunity and you want to trade. And if you are a conservative trader, you are not a risk taker and you only want to take trades that gives us good returns or high probability trade setup. Okay, the difference is between these two, and also you must understand that aggressive trader has got more trades and more stopped out. Conservative traders got less trades and less stopped out and less opportunity. Okay, then also you need to tell yourself, okay, what kind of trade you want to go for, okay, before you decide. That means, you see, you can go on a few trade methods or methodology, meaning you can call as a day trading, you can call that as a swing trading, and scalping, news trading, and momentum trading. Okay, the difference is swing trading, you give more time, more profit. Okay, more time, more profit. Day trading, also more time. Compared to swing trading is less, but less profit. Okay, and always remember, we only hold a trade when the price breaks the critical low or critical high. Okay, what do I mean by that? That means if you are holding a sell, okay, like gold, let's say we are holding a sell. Right now we entered at 3362. Okay, we are holding a sell. So if you see, if you call yourself a conservative trader, then we play the game by 1 minute, and the most is 2 hours, 4 hours, or 6 hours. So that means, like for instance, if let's say we go for 6 hours as the maximum for a conservative trader, okay, conservative trader. Okay, now I'm going to go for a sell, and all I know is I got to exit or take profit before 46. Okay, 46 or 48. So I will give this trade a specific time and make sure that my price target is reached. And once my price target is reached, then I'm out, then I forget about the trade. But if you are an aggressive trader, if you feel okay the price, you want to go for a bigger profit, the only difference is you have to take more risk and you have to give more time. Okay, these are the two conditions you need to fulfill. So when you give more time, okay, make sure that this low breaks and this low breaks, then you know that okay, this is going to give us a good profit. If this too low doesn't break, then this market is going to back into the range. Then this is also going to be in the trade range trade. Then we should be closing our trade. So your decision has to be very precise, and you must also know what you are doing. Okay, this is all because you are responsible for your trade and you are managing your trade. So you cannot say that I wanted to. Sorry. Okay. So you are responsible for your trade and you are responsible for your actions. So whatever you decide, you make the right decision, you get the reward. You make the wrong decision, you pay the price. And this is what you should be telling yourself, and this is what you should be knowing. Okay, without knowing just blindly, because you see, we are here. Okay, we are here. We are just uh, weatherman giving you a weather forecast. Okay, giving you like today, it's going to rain, we are going to shine, or going to get whatever. We are just giving you a guidance, and you have to use that guidance, and you got to maximize your returns. Sometimes, okay, like for instance, like I'm saying, like okay, we are going to sell at 62. I may be selling at 64 or 65. This all doesn't is not going to make much difference, because end of the day, what I do, what I trade is what I'm responsible for, and I'm responsible for my decisions and my actions taken for the trade. So we when we give, like for instance, we give you like 62, 66, 70. It doesn't mean that you key in all three together blindly and just do. So you may want to key in at 62, and at 66 maybe you want to key in at 70. Then you may want to go for a higher level. This all is up to your decision, because end of the day is your money management. See, the key to success to this business is your you can have a very simple system, a fantastic money management and fantastic money management and trade taking decisions can still be a winner. But on the other hand, the system can be like a fantastic system, but not a good money management can still fail. So end of the day, the key to success is your money management. So that means when I say money management, okay, what do I mean by that? The levels of entry. That means always remember, when we go for a trade near the market, the best solution is try to go with the minimum lot size, because sometimes the market can swing up and down, and when market entry we try not to go with the maximum lot size. So and the second entry, third entry should be the best entry point. Sometimes your second entry fail. When it's coming off, take the profit. You can go for re-entry again. So what we can do is we can do a multiple times. So we can do a lot of things, but end of the day, you should know what you are doing, and uh, how to do things. So to teach you how to do things, okay, like just now we are only into gold trade, so I'm going to talk about gold. That of course the euro, we want to be in the trade, so the one also we need to discuss, because we need to see whether the entry we should go in or we should wait for that entry. So that is the thing we need to know very clearly, very precisely, so then you know what you should be doing. Okay, now let's talk about gold. Okay, you see gold, your 6 hour chart. Okay, 6 hour chart, this is trading below the open. That means below the open, and this time started at 11 a.m. Singapore time. And this we have another 1 hour, 12 minutes, or 1 hour 15 minutes left. And always remember, we use guidance. Okay, this is, you see, we are doing a business, we are looking for probability, we are looking for low risk high returns probability. So the best way to check our probability, whether are we in the safe zone, safe hands, or are we in the danger zone or danger hands. Okay, how we know that? The rule of thumb, there's two things we can use. Always we use this guidance. Two things. One is see whether the price is trading below the open or above the open. So that is one check we can always check to see whether we are in the safe hands. So as far as this gold is concerned, if you're looking at 6 hour chart, okay, holding a sell, this is still a safe hands, because this is trading below the open. Okay, so this check is through. Then the next check we got to do is, we got to check whether our current high, whether this is higher than the previous high or lower than the previous high. So this would be your the second check. So when I do the second check, my current high is 67, previous high is 72. So that means this is making a lower high, which means to say that, okay, I'm safe to hold this sell. So two checks, two has passed. Okay, two has passed, and we can safely hold a sell. But the tricky part is, you know, in trading, it's not like just one check and that's it. So we'll confirm, okay, we are good to go, and we stay with the trade. We when we look at different time frame, it will give you different answer, and it will give you a different, and that's where the confusion is. Okay, now let's say I show you an hourly. Okay, now you see here. So the tricky part is, okay, now it's giving a contradicting answer to the first check. So this is, you see, now your current high is higher than your previous high. Market is trading above the open. Okay, so now it's giving a contradicting answer. So now what should I do? See, the 6 hours was telling that, okay, I was very confident I should hold a sell, but when I look at my 60-minute, I get confused. Okay, now the 60-minute is telling me I got to go for a buy. Okay, so what should I do, or which I should follow? So to give you an answer for that, okay, the best answer is always the higher time frame supersedes the lower time frame. So that means to say your 1 hour will be controlled by your 6 hours. Your 6 hours will be controlled by daily, daily will be controlled by weekly, weekly will be controlled by monthly, monthly will be controlled by quarterly, semi-annual, yearly, so on and so forth. So now, the next thing I want to see is, okay, never mind, this is going up. Okay, now, how long is it left for this high to go. So if I look into it, I only have another 8 more minutes. Okay, so not bad. So now I can hold my trade, and I feel that okay, I'm still safe on holding a sell than going for a buy. If it was beginning of the time, then we should have bought. But now, as of now, it's failed and it's coming down. So I think it would be best for us to hold sell. Okay. Uh, okay. Am I being very clear? So just give me some feedback. To say that okay, whether you understood. So what I'm trying to do is I'm trying to teach you. That means after we give the signal, how should you respond, and how should you manage the trade, and that is the thing I'm trying to explain to you. Okay, now the the check, I told you, the two checks I told you, that is a very simple check. And if let's say your 360 is breaking higher highs, and if I'm going for a sell, then you are sitting in the wrong side of the market. You have to close as soon as possible. Okay, now the next check we have to do is, we just, I don't want to confuse with you with too many things. Just look at a moving average crossover. Okay, when we have a moving average crossover, what we look for is, we see whether the price is trading below the moving average, and whether the crossover happened or not yet. Okay, what do I mean by crossover? Okay, this is what we mean by crossover. Always a low or high is confirmed when the price goes below or above the moving average. So in other words, if moving average crossover happened, price goes up, that means a low is confirmed. So now price comes down, moving average crossover happened here, that means the high is confirmed here. So right now what we are seeing is, we are seeing a moving average crossover, and price is making lower high, which is also a added benefit to our trade. So lower high, moving average crossover, and now second time is going below the moving average, which means to say that I'm still in the right track and I want to hold this trade. So now I think we are making about $6. Let's wait for that trade, and we still have time, so I will tell you when to close. Then the third check we do, the third is moving average. Then the fourth check we do is RSI. Okay, RSI, ever since trading has started, okay, that means many years back, RSI was, I think, one of the pioneers tools, or the earliest tools that was invented. Okay, and this is one of the most powerful tool, and especially when the market is in a range. The tricky part of RSI is you should know when to use it, when to ignore it. RSI is very effective when the market is in a range or congestion. We should ignore it when the price is in a trending mode. Trending means uptrend or downtrend. So that is the tricky part, and it's a bit complex, but we will guide you, and we will show you, then you can look into. Okay, this one, what you see is when the RSI makes the high. Okay, now you see here, if this is a range, RSI reaches overbought and price comes down from here. So the same thing here, market lower high, still in a range, market is making a lower high, but when you look your 1 minute RSI, that should give you an answer whether the high is seen, because if this we see here overbought, then this is a divergence, and we can safely say that this is the high. So we should see the price coming off, and it's coming off as of now. Okay, so that is the next tool we need to look for our guidance. So I repeat, first is opening price principle. We call it whether the price is trading below or above the open, and each one can give you a different answer. That means when we look into a weekly open, it gives you a different answer. Daily open, it gives you a different answer. Hourly, it gives you a different answer. 60 minute will give you a different answer, so on and so forth. So when we look into it, for sure we know whether it's trading below or above the open, and we always try to play the game near uh, the lowest time frame. Okay, just give me 1 minute. Okay, so this is the thing we need to take note. So now, what I was saying was, we need to see the opening price, then we have to see the current high and low for guidance to see whether the market is making higher lows or higher highs, lower lows or lower highs. Then the third one is moving average. Fourth one is RSI. The fifth one usually is not easy, but it's difficult. Okay, we call it the patterns. We use patterns, and we call it either a sentiment change, or we call it as polarity change. So like for instance, if you see here gold, okay, this is the high, market came down, then retested, and when it retested, this high did not go above this high. So this is where we call it a sentiment change or polarity change, which means to say that, okay, like early on I said the high is seen, and we expect this price to come off, and we expect this low, this low, this low to be tested, and once it breaks, then I think we have seen a reversal of the high, and we should see the correction just I'm trying to do a projection, just give me a minute. Okay, so if the price breaks this low, we should see the price heading towards 26 or extension of this level 10 3296, and this should be your final target, which is 3273. So this is how the price is going to move. So there's two possibilities. Either the market can be in a congestion or range. This from here it can go up, then break and turn down, or if this low breaks, then this price can go lower. So only when we have limited options and limited directions which we see the market heading, then I think we would be quite clear in what we are doing. Then we can stick to that directions and trade in that directions. Okay, so now gold this is the scenario. We wait since it's making lower highs, trading below the open. Our RSI is still not reached overbought. We'll wait for this trade. Now what we can do is we revise our stop to cost or 61. So we are just revising to think we can even put at 60. Okay, revising stop to 3360. So once we revised, then we can move on to the next trade. Okay, this is how we should be trading. That means once we know that, okay, this is for sure we are not going to lose money, so let it work. Then we'll give time, we'll give one more time, one more hour. After that, we will try to lock in our profits. Okay, after that we will try to lock in our profits. So now let's see the euro dollar. Okay, euro dollar. Okay, remember we are supposed to be selling at 11420. Okay, we were supposed to be selling at 11420, and looks like we may have seen the high. Okay, we may have seen the high because the price is already showing lower highs on both sides, and this is a indication that the high is seen. So now I want to sell 0.2 or 0.3 at 11390. Okay, euro, sell 0.2 at 11390, stop at since we are selling an early one, so we'll try to sell because we are betting that the high is seen, so we'll try to put a stop at 11410. And TP 11, that means if this is the high, we expect this low to break. If it breaks, then we should see either 11330 or 11305. Okay, so TP at 11330. Okay, so now I want to enter this trade. You may even want to sell at 85 or 90. Okay, because you got to be in this trade. So I'm just hitting the market. So euro, we are going for a sell. I mean, I've just hit the market because I see that the high is already seen. So the same thing for pound. Okay, pound is also a similar situation. We should have seen the high, so we should see this low breaks. Then we should exit at 34, 70 or 75. So we will try to sell at 30 pound, .2 or 0.3 at 135, 25 or 30. Yeah, then stop at above the high 45 or 50, 55. I think you can put 55, 13555. TP at 134.75. So I'm already into three trades. Okay, so I'm already into three trades. So we will wait the outcome. Then we will see how we can go about it. Okay. Any questions or anything you need to clarify? Okay. So we have no questions. Okay. Thank you for coming, and I'll see you again tomorrow. Okay. Thank you. Thank you. Bye.